Hello everyone, welcome back to the channel. I truly believe that today's video might be the most important video you watch for the next 2 quarters because I think that we are headed towards an indices wide drawdown. And I'm not saying this because we're at all-time highs. I'm going to walk you through my logic and I'm going to present my case of why I believe that SPY might come down towards 650 and below. And this is extremely important for you because when the time hits, when the news hits, everyone will be going around saying we didn't see it coming, nobody can tell. But I'm telling you, there is a pattern and I'm going to walk you through it. This can make or break your portfolio. But obviously, if you do dollar cost average and hold for the long term, this doesn't bother you. But if you're trying to profit in short periods of time like I do, I would highly recommend watch the entire video. And the last 2 times I predicted this, I ended up making 120 to 150% on both of my trades. And that made a massive difference in my lifestyle, in my portfolio and everything. And the last time it was during the tariff tantrum, I didn't see the news coming, but I did see a drawdown coming. What would impact it? You just don't know what happens in that exact moment. And the second time was in March when we had this 10% drawdown. And both of these times I took 2 different types of trades and I'm putting documentation together, my fundamental research together for this upcoming drawdown where I'm pretty sure I will again profit almost 100% on my portfolio. So let's zoom out here and let's go all the way back to 2010. What I want you to observe are these blocks, which are the midterm years. Because currently we are in one midterm year, which is 2026. The last time was 2022, then 2018, go back to 2014, and then all the way to 2010. The reason I wanted to go all the way back is because the pattern has been holding for over a decade. So why should I sit here and believe that this time it's different? What I want you to observe on these patterns, let's go one block at a time and understand what happens. So this highlighted area is the entire year. Notice that we start the year with some weakness. We go up, break a new all-time highs, and eventually we come down and sweep the previous low. And this is where the opportunity lies. The midterm brings a lot of volatility, a lot of confusion. The market doesn't like uncertainty. The closer we get to Q3 and Q4, the chances of another drawdown is a lot higher. Let's look at 2014. Notice that this had the same pattern. We found weakness around April, May timeframe. Then we started to go back up. And then somewhere around Q3, we dropped again. We saw about, let's see, a 10% drop from the highs. And then we started to make our way back up. And this was in October timeframe. Now, the difference between this one and the first one is that we didn't sweep the previous low. So that was very different. But let's go back to the first one more time. So from the highs, we saw about a 17% drawdown. So that was a lot larger than the second time in 2014. Let's go to the next one. The next one, we're looking at the drawdown of about 20%, which is more than both of those times. And this was a different type of year because in 2018, I do remember we had that whole government shutdown. And I understand that a government shutdown has become a joke at this point, but back in those days, it was a lot serious than it is now. So we saw that massive drawdown because of it. And that year started the same way. We started going up, we saw a little drawdown, broke another all-time highs, and then came back and swept the lows. Let's zoom out and go towards 2022. Now, 2022 was an actual bear market as well. So a little different, but almost the same picture. We came down into the start of the year. The only difference is that we did not break an all-time high again. We created lower high and then we went down again. But at the end of the day, in October timeframe, we did sweep the previous low. So it's not going to be 100% same, but you kind of get the picture of what I'm trying to say. So from the previous lower high to all the way down, we are looking at about a 20% drawdown again. So this pattern has happened multiple times. Another thing I want you to observe here, because even if a data point doesn't make sense, I like to observe different things to see if there is a correlation to be drawn. The first time we were already coming out of the 2007 great financial crisis, and in 2010 we were still below the 200 weekly moving average. The next time we were far above the 200 week moving average. Then if we move on to 2018 and 2022, we tapped into the 200 week moving average. Now, when I look at the chart today, I do not see a scenario where we tap into it, but I do want to observe the fact that we did do this in the last 2 midterm years. So what is there to stop the market from doing it again? I don't know. It's just hard to believe that we will peak at 760 and then see a drawdown all the way at 25% and tap the 200 weekly moving average. That is quite a large drawdown. But then again, this is why I'm making the video. You see the pattern, you see what happened in midterm years, and anything is possible. With all the unknown uncertainty going on around the world, with the US war with Iran, chip shortages, oil shortages, ships are not going through. Can we really predict what news comes up next? I don't know. But one thing the pattern shows us is that the previous low that we created in the start of the year between March and April time does get swept. So what I think can happen here, if we follow the same path, is that we come down here again, we sweep this low, which puts us very close to this moving average, right? If we just kind of make it go up like this, and then we will probably start making our way back up. Are you ready for this? That's my question to you. Are you ready for a drawdown of about, let's see, from the highs, this will look like almost minimum 17 and then most likely 18, 19, 20%. Are you ready for a scenario like this? Let me stretch this out because I want you to be hopeful after that we will continue higher. So I want you to zoom out here, look at this chart, look at the patterns, understand what has happened historically, and look at your portfolio and your holdings and ask yourself, are you ready for this? Or are you just going to be sitting here hopeful that it goes higher? Now, I'm a man who is always okay being wrong. I operate in a manner where no matter where the market goes, I will profit off of it either way. Right now, I'm holding a decent amount of cash, and I'm also holding all the ETFs that I hold and dollar cost average into. So no matter what direction we go to, I am going to be perfectly fine. But if we do get this drawdown that I'm predicting, I will again most likely hit another 100% trade, and that will be with pretty good size, because if SPY comes down here and you have chosen a stock that is compressed and it's a growing company, then the chances of going lower become very small, and that trade that you take in a drawdown like this is absolutely just skewed to the upside. Both of these times when I last saw the drawdowns on SPY and kind of predicted them as well, the trades that I ended up taking reversed within a few days. I didn't have to see a drawdown for more than I think 2 or 3 days. And taking trades like those is really scary, because let me just give you an idea what I took. I took Oscar. Oscar I bought at exactly $11.15, I don't know, $11.10 I think, and it reverses so fast. But because you have so much size, it's terrifying to see so much profit so fast. So that's what my channel is all about. I sit and I wait and I look for the best risk reward opportunities where you can size in. You're not putting like 2, 3, 5% of your portfolio. You have the ability and the confidence to put 30, 40, 50, 60, 70% of your portfolio, knowing that the drawdown is very minimum. And long story short, I don't want you to worry about the stocks right now. I do want you to sit back and understand the SPY chart, understand what you need to do to be ready for this. And as the drawdown starts happening, I will find my best risk reward setups that I would want to take. I do have a few nominees that I think are very good companies that I'll take when the time comes, and I'll make a video on that. But for now, I hope this video provided you with some value. Please leave a like, leave a comment, subscribe to the channel if you want to, and I'll catch you in the next one. Thank you so much for watching.